Rob's Child. Nothing I say is investment advice. I wanted to do a video on using ChatGPT to figure out what we should be investing in right now. And I want to go through its answers step by step. And I also want to share with you my pie chart of my own investments right now, because that's fun for me. So let's start with, I'm not an investment advisor. Nothing I say is investment advice, and I fully understand that I do not know actually anywhere near as much about finance and markets and these kinds of things as many other people out there, many experts. I don't care. I'm interested in doing this mostly for myself, to clarify my thinking, and maybe I'll give some people out there some ideas that they can use for their investment success. That's kind of my intention with all of this. I asked ChatGPT a question. I said, imagine a scenario where inflation is above the Fed target, currently 3%, while the target's 2%, after inflation was recently at 9%. Also, the Fed funds target rate is 5.25 to 5.5. Also, the 30-year bond yield went from a low of 0.7% to currently 5.2%. Also, the Fed paused interest rate hikes a few months ago after a historic hiking cycle. What are good investments to make if you were in this scenario? I'm going to start by reminding everyone, or telling everyone, informing everyone, that ChatGPT currently does not have current data. It uses the internet, a picture of the internet, I understand, from 2021. So it doesn't know about this scenario in 2021. It uses the information it had then to determine what good investments might be in a hypothetical situation such as this. And I'm going to go through its suggestions. Number one said tips. Those are Treasury inflation protection securities. Funny enough, in Lynn Alden's recent October newsletter, she mentions tips as being interesting, especially because they now have a real yield. In other words, the yield is actually finally higher than the inflation rate. So your buying power increases. Even if stuff gets more expensive, your buying power is actually getting stronger comparatively. She said she finds those interesting right now, and I find it very interesting that was the first suggestion ChatGPT made thinking about this scenario. The second suggestion is short-term bonds, and that one's pretty obvious. Lots of people, if you're watching this video, it's extremely likely that you understand the benefit of holding funds in a money market account, because money market accounts hold short-term treasury securities, which are currently yielding more than longer duration securities. That's the inverted yield curve. And usually in normal good times, the long end is higher than the short end, and it's coming up. And I'll probably I want to do another video about that, but I'm not going to get into it right now. Number three, commodities. It says inflation can drive up commodity prices. Consider investing in commodities like gold, which traditionally serves as a hedge against inflation, or other commodities that are in demand. That helps my thesis with Brazil. It helps my thesis with uranium. It helps also the section of my own portfolio in precious metals, which I currently I have 5.5% in junior silver miners. In fact, just show that real quick. So there it is. There is my holdings in a pie chart. Over here, my precious metals, 5.5%. I didn't do a video update on this, but with the bonds yields spiking so high, I couldn't resist. I am now 39% in 0Z. And is that the right move right now? I don't know, but I do know that the economic picture does not look very pretty to me in a lot of ways. And I also know that when stocks really crash and when the economy really crashes, there's typically a run to safety, a run to treasury bonds. And so holding on to that, selling equities if they keep going up, and continuing to grow the bond side of my portfolio is kind of my own plan. But that's not the point of this video, although I did want to include it. But let's move on. The fourth suggestion is equities. There's a total of 9 suggestions. So I mentioned this in my last video as well. When high inflation is happening, we want equities. It means, because usually if things are getting more expensive, it means companies are able to increase the nominal, the amount of dollars that they're able to earn, because prices are going up. People keep paying higher prices, so they can charge more prices. They can potentially make more earnings. ChatGPT does mention that especially certain sectors can perform well, especially companies that can pass costs to consumers, including energy, commodities, certain industrial sectors, and yeah, that's what it says. Number 5, it says real estate. I want to go back to gold. Just want to mention gold real quick. I think it's very funny, Gareth Soloway. If you're watching this, you probably also watch Gareth Soloway, very good trader, very famous trader at this point. He seems to be pretty bullish on gold. I can't imagine it just because of the fact I can't imagine who is buying gold. Who? I'm not buying gold. And if it goes up to $3,000 or $4,000 an ounce, I'm still not going to buy gold. So I don't know who these people are that are buying gold and thinking other people are going to buy their gold from them at even higher prices. Gold, for me, as much as it's an inflation hedge and a hedge against a lot of things, when it comes down to it, gold is it's largely a speculative investment in a lot of ways. Yes, it has a certain level of protection, it has a history and everything, but at the end of the day, nobody wants more gold. People want more dollars. They want the dollar number on the equation of dollars equals this much gold. This many dollars equals this many gold. They want the dollar side to go up. That's the goal of owning gold. Nobody says, Oh, I have gold. Now I want more gold. Oh, look, I have 2 gold. Gold doesn't mean anything to anyone. It doesn't mean anything to me. I don't want more gold. I want more dollars. I mean, maybe when I'm much older and I have like 10, 20 years of my life left, then maybe gold becomes a little more interesting, I suppose. But for me, for now, no, I'd buy it if it's like clearly cheap. If you look at the graph of going up and down, I think it's in a mania phase right now, and I think it's going to collapse. But I digress. Let's move on with ChatGPT's suggestions. After equities, we say real estate. Real assets like real estate can act as a hedge against inflation, like REITs. My only issue with that, again, like right now, is that it seems to me that the real estate market has gotten so high that I'm not really interested in trying to chase it higher while Jerome Powell, even today, I think, came out and is stomping his feet, saying how he needs to slow everything down. Everybody's got to slow down. He wants it at 2%. And finally, I've heard people suggest that we should just accept the 3%. What's wrong with a 3% inflation rate? And he's on the warpath to get us to 2% right now. And in a scenario like that, I don't love real estate personally right now. And then number 6, foreign investments. So it can help reduce exposure to U.S. economic conditions and currency risk. And it's interesting that it suggested that. I feel like that's an older way of looking at things. Today, I think the world economies are a lot more intertwined, and so foreign investments aren't necessarily going to give you a lower drawdown. I mean, it's kind of funny, like suggesting this. It's kind of there's an undertone here that's just saying like, yeah, recession's coming. Come on, the yield curve's inverted. That was implied in my question, and the way it suggested that I thought was pretty interesting. Number 7, stocks with dividend growth. And I like that idea. That's the one thing that's really keeping me from selling what I have in value stocks right now. I know when we get to that phase that Michael Burry has been predicting and is probably right, when we finally get to the point where we see earnings contracting, that's when value stocks start to lose some of their luster, just because all of a sudden the dividend payments seem like they're at higher risk. It's funny, companies that really have no risk still end up selling off with everything else. When the markets really crash, they take everything with them, no matter how good of quality they are. It's to the point where you can find stocks that never stop paying their dividend payment, and they drop with the rest of the market 60-70%, and all of a sudden they were yielding 5%, and now they're yielding over 10%, maybe even higher, and they never miss a dividend payment. And so that obviously is an error when good value stocks sell off. But it's a lot more fun if you have the right types of assets at a bottom to take advantage of that at the right time, which I'm hoping that I can do. I'm hoping that buying all these bonds is going to work out for me. But I digress. Let's get back to ChatGPT. We have two more high yield bonds. I've had my eye on high yield corporate. It says, be careful which ones you pick because of the credit risk and everything. I haven't gotten into exploring individual high yield bonds or preferred shares, anything like that yet. I still feel like a child in this financial investment world. But if you look at HYT, it's a high yield corporate fund. It's very cheap compared to how it's been in the past. But I'm personally very surprised it's not a lot cheaper right now, simply because the guaranteed yields are skyrocketing right now. And how is a higher risk bond supposed to be able to compete with that? It has to drop. Like I'm kind of confused about what's going on there a little bit. Like the premium that the high yield corporate pays on top of the guaranteed rate is mattering. It matters less as the rates are going up. Like every time it stays flat while treasuries are tanking, I'm like, I can't wrap my head around it. But so high yield bonds, it's suggesting, maybe it's assuming that at this point that they're cheap, and they are sort of cheap. Like again, if you just look at HYT, it's a pretty decent proxy for finding high yield and the price of high yield right now. Number 9 is the last one. Suggests cryptocurrencies. So for investors with high risk tolerance, cryptocurrency like Bitcoin are sometimes seen as a hedge against inflation. Keep in mind that cryptocurrencies are highly volatile and speculative. I'm expecting Bitcoin to get cheaper. As soon as we do see stronger and stronger evidence that the economy is slowing down and people are divesting in risky things, Bitcoin is going to be the first one to go down. And then we get less and less risky things that usually kind of follow it. And so that is ChatGPT, their answer of how to invest in an environment like this. So I'm going to share my own portfolio in a pie chart to show you what I have, and I want to explain why I have what I have. So here's my screen. Like I said, 39.2. It dropped a bit today. I put in a lot of money into it yesterday. I have to pause this for a second. I have 39% in 0Z now. Long duration bonds. That fund, it says it is a 25 plus duration on it, which gives it a lot of leverage for interest rates. So when interest rates go down, the value of those shares go way up. I've spoken in previous videos about having cannabis. I reduced it to 0. And it's mostly because of these bond rates that are spiking right now. It just seems like, the kind of people, I don't want to offend anybody, but people that are investing in that area, I am thinking may be a little bit trigger happy when it comes to selling this. In other words, I expect this to be one of these kind of like first to fall types of investments. So I cut that out of it. I'm going to go through all the things I own and why. ARK, I have ARK, ARK-K, ARK-Q, ARK-W, a few individual stocks that I like that are big part of the ARK funds. I eventually want to have 20% in ARK, but I don't want to miss the next wave up. So, one thing I wanted to mention about ARK. So, ARK had this massive run, and these companies have been doing well. They've been increasing their revenue, their market share, and everything, but they're still largely not very profitable. And in an environment with higher interest rates and nobody knowing when they're going to start going back down, ARK is a pretty risky place to be. This is a very long duration asset. We don't know if or when these companies are going to really have their heyday and actually make real money here. So I'm holding ARK right now with a huge grain of salt. I think does that make sense? I know that this can drop to 4.5% of my portfolio, and I'm just living with that. I'm going to have to live with that. China. I had the target of 10% for a while. I bought when it was pretty low enough to get it up to 11% on its own. I like China just because. So a few things I want to mention about China. China is on the ground floor. China, I think, already had its collapse. And I think that we're on a floor right now. And they're even saying, they've already cut rates in China. And they're already seeing they're further ahead of us in the business cycle. They usually are. If you look at the charts of like China ETFs, for example, you can see a little bit of a pattern that when China markets move a certain direction, a lot of times the US follows it. And I think China may be doing well, better than most people think, sooner than most people think. And so I'm excited about China. I have value stocks, mostly tobacco and shipping, like Zim and Starbolt carriers. Uranium, one of my favorite places to be. ChatGPT seems to, look at how many categories uranium fits into. It's a commodity. It's not just a commodity. I have commodity producers. I have juniors. I have URA. I have URNJ. I have some individual stocks in that area, and they've been doing very well. They've been going up a lot. I had increased the position size to 10%, and it's grown on its own. I've been trimming it actually for a while to take some profits, to take some money off the table, because why not? If it drops down below 10% again, I can use those funds to boost it back up again. But getting back to the ChatGPT idea here, so commodities, it's equities. And it says specifically equities that produce commodities in certain industrial sectors. And this industrial sector in particular, uranium, it's becoming more and more well known that there is not enough production of uranium for the demand over the next decade, it sounds like now. And so that's a very fun place to be. Bitcoin, I'm bearish, which is why I don't have 10% in Bitcoin. I only have 2%. But hey, if Bitcoin goes to the moon, then that 2%, I'll enjoy it. I'll enjoy the ride. And if that 2% goes down to 1%, if it goes down to 0.5%, I can live with that, and I can, at that point, accumulate more Bitcoin, which I am planning to do. So it's a little bit of a FOMO to be holding it right now for me, but again, it's kind of funny how ChatGPT actually suggests cryptocurrency. And one other thing I want to say about cryptocurrency is that it has now proven itself to not be all that correlated with any other asset class. So if you're looking for diversification, it seems Bitcoin is a really good diversifier. It doesn't care what bonds are doing. It doesn't care what gold's doing. It doesn't care what stocks are doing. It doesn't care what rates are doing. This is starting to sound like a Dr. Seuss rhyme. But Bitcoin, here or there, and everywhere, it doesn't seem to care. It's an interesting way, and I think a productive way to diversify your assets. Then Brazil, I have 10.5% in EWZ and EWZS, the small caps of Brazil, which has a little bit more beta exposure. And again, with a ChatGPT, it fits it. They're a huge commodities producer. And these indexes, these ETFs that I just mentioned, are equities, and they're the kinds of equities that ChatGPT is suggesting. It's also a foreign investment, so it takes a little bit of the currency risk of US dollars actually off the table to some degree. Again, that's probably the weakest argument there, but it has some validity. I don't know if it outweighs the political risk of the fact that a lot of these Latin American countries, every once in a while, become a lot less capitalist and, well, I mean, you know what I'm talking about, I'm sure, if you're listening to this. And then let's go around the rest of this circle here. Bitcoin, Brazil, gambling hedge. Yeah, I have about 1%. I'm trying to maintain about 1% of my portfolio and super very risky assets. So I have a few stocks and a few penny stock like things that can spike. One is a very small position in Fannie Mac, the real estate stocks that are in conservatorship, that if the courts ever finish the nonsense that they've put the shareholders through, those shares are worth significantly more than what they're trading for, except for the fact, again, this is all about the conservatorship. I don't know if we'll see that end within my lifetime, but it's a fun speculative place to be. And then rolling UVXY calls in case the market collapse. I can at least save some of the collapse by having that. That's a true hedge. It's a very risky hedge, as in these calls, they lose all of their value and everything, but it is what it is. And then precious metals, it's basic. That section is basically all junior silver miners. So, and I simplify the categories, and value isn't exactly value, but I think of commodities as value. And so I have my pie chart here I wanted to share with the internet. And here it is. I have other pages on there that are kind of fun. I have a ideal asset allocation page. I'm falling in love with Google Sheets. The spreadsheets, they're so fun, especially the pie charts. The pie charts make it so much fun. Anyway, a lot of this video is just me rambling. I hope someone enjoys this or can get something out of it. I don't know if they will or they won't. But either way, I hope you enjoyed and got something out of it. And if you didn't, sorry I wasted your time. And that's all. Rothschild.